How you doing, man? How's
Uh,
how's Miami treating you? Because it's -6 here.
it's great. The weather here is amazing right now, and it's can't complain. I hear San Francisco is a ghost town right now, sadly, because of Omicron, and
Yeah.
right down here it's partly less a ghost town because everyone's here, and no one believes we have COVID down here, despite 2.5% of the population gets it every week.
Florida's a unique place to be. What's it been like moving there? I mean, when I think of Steve, a couple of years ago, Florida is not really the way that I thought of you. But when did you actually move? It was not. Was it post pandemic or pre pandemic?
It was way pre-pandemic. It was late
Yeah.
18. And it was really part of a move to just get to the East Coast because we have so much business in Europe and sort of Middle East and Africa and all over the world. So I needed to be in a better time zone than San Francisco. And I'm from the East Coast. My mother lives out here and comes down to Florida a lot. So I figured, Florida would be a great place to be. And we checked it out. My wife and I checked it out for a weekend or two. And we said, this is pretty awesome down here. So why not? And then, yeah, you couldn't have picked a better place to be, during the pandemic, just because the weather and working from home and being outdoors, etc. So it's been great.
Yeah, I mean you're an early adopter. You're one of the few in this world that moved pre-pandemic. So I think that should probably be first on your Twitter bio. I mean, you've made some impressive investments. You've done some amazing things in your life, but really you should just be tweeting at Keith Raboy and telling him that you were first. I think that's how you should
Exactly,
use your time.
exactly. Yes,
Well,
he's always following.
he is. He's always following you specifically. No, I'm
There
kidding.
you go. He could be outside
Um,
my house right now.
Exactly, exactly. He's sitting out there in a car just watching. So take me back to the Steve youth. Take me back. You said you're from the East Coast initially. Give me a little bit about like your upbringing. Did you, were you running an investment bank in middle school? Kind of,
There you go.
trading bubble gum for something else and arbitraging something.
Yeah, no, I mean, like, I was born and raised in Philly, city of brotherly love, a home of Rocky. So, I, moved around as a kid. We moved to Kentucky, to Virginia, back to Pennsylvania. So, kind of moved schools, moved around, and we didn't have much, nothing major growing up. So we had to kind of fend for ourselves. And I always give my mother credit for instilling a work ethic in me. She, I think when we were 4 years old, had us like cleaning the house and signing up for chores and, 3 cents for this one, 2 cents for
Yeah.
that one, and she'd have the three boys' names across the top of a piece of paper and all the chores on the left and how many cents you got. And I would just rush around the house doing everything. Probably did a horrible job, but she paid me the 2 cents anyway. And then, I mean, like whatever. I was in the Cub Scouts and all that kind of stuff. So, just like had a pretty good work ethic in general. And, um, I tell the story all the time about, painting rocks that I would find white and then painting the neighbor's address on the rocks and then selling the rocks to the neighbors, as a
Oh
nice
wow.
address thing for their garden. So, yeah, I mean, we were doing that. We were really young. And then that was before the paper routes and the, all that kind
That's
of
a
stuff.
unique
So,
one. That's a unique
yeah.
one.
So,
I've
yeah,
heard
been,
a lot of lemonade stands, but I hadn't heard the painting the rocks white. That is a beautiful cost of goods sold.
yeah, you just get the rock from the creek, and you get the paint from the garage, and you're in business. Zero cost of goods sold, and you're making $5 a rock. It's good.
See, we're already giving great advice to founders out here in this podcast.
Exactly.
We're making
Right.
progress already.
100% margins, right? It's good business. So, and
So
a zero cost of acquisition because the neighbor's not going to say no to this cute little kid coming up with a free rock with the $5
exactly.
rock.
Yeah.
So,
What was your first job? Like when did you start working in or maybe under the table, but when did you start working?
first job was probably serving food at the local pool. So I worked at curbside or courtside, it was called, and I would go make the pitas and the meatball sandwiches, and then I would go to the pool and deliver them, and take the order, have my like money belt with my change and my dollars in there, and then I go back and serve all the people relaxing at the pool, and I got to play tennis there for free, so that was pretty cool. And then and then, I got a job at the local movie theater, basically as like the popcorn guy, and then, making $3.35 an hour.
Yeah.
I still have my paycheck stubs from that, believe it or not. And then moved up to the ticket ripping guy, and then selling ticket guy, and then I was assistant
American
to the
dream,
assistant
basically.
manager on Tuesday night. It was like and then assistant manager on Friday night, and then pretty soon had the whole theater, working for me, and was running a couple different theaters. That was high school and college actually. So I worked all the way through college for the most part. Went
What
to
did you study in
Villanova.
college? You studied finance, right?
Finance, yep. I was a finance major. But really wasn't sure I wanted to do banking until
Yeah.
maybe the end of college, and kind of looked at accounting and finance in general, trading and,
Yeah.
economics. So I knew something in business. I looked at commercial banking, you name it. And then I kind of settled on investment banking because I wanted to work with the CEOs of these companies, and I wanted to, figured, trading stocks or trading bonds or selling those kind of things was interesting. But I said, wouldn't it be cooler to trade the whole block, the whole company, right? Or massive blocks, because of the transactions being so incredibly confidential and only a few people in the whole company would know about it. You're obviously only talking to the CEOs and founders of these companies. And so kind of automatically knew you were going to be getting great exposure. The problem was I couldn't get a job. I was coming out of Villanova looking for a job in '89, but in '87 was Black Monday, stock market cratered. It took a while to come back. And then in '89, there was another crash, and that's when Drexel Burnham and all these other banks went out of business. And there was just really no jobs on Wall Street in '90. So I took a job at GE in their financial management program in actually right around where I lived. So I was, I lived around Villanova. I went to Villanova. I got a job after school. So I was kind of like all about, kind of like that whole outside of Philadelphia area.
Was that
But
Jack
then I
Welch
started
days,
traveling
or
around with, what's
was that
that?
Jack? Was that Jack Welch? Sorry, I cut you off. Was that Jack Welch days or
No,
pre
that
Jack
was
Welch?
full blown Jack Welch days. I
Yeah.
got to meet Jack when I was there. I
Nice.
was on this thing called the Financial Management Program, which was their high end training program for finance kids.
Yeah.
And it was a 2.5 year program, and I was able to kind of graduate early and get on this thing called corporate audit staff, and that was sort of the kind of as good as it gets at GE in terms of like 120 people on a kind of internal kind of
Yeah.
SWAT team.
Yeah.
It wasn't so much being an auditor, but you were kind of like going into different business units, parachuting in to whatever the biggest problems were in the whole company. So I spent 2 or 3 months at each of like 8 different GE businesses during a course of a year plus. And I was in Evendale, Ohio with the aircraft engines. They gave me a whole plant to like restructure.
Wow.
We did a whole review at GE Capital. We did some stuff at GE Medical Systems, GE Appliances, GE Motors. I spent time in middle of nowhere, Indiana. Lots and lots of different assignments, but that was incredible experience for me.
Yeah.
But the funny thing is, I love GE, and it was people think of GE today like Borders Books or something like that, where it's like old school. But like back then, it was king of the world, and it was a great training program. And it was 24/7. I remember working 24/7 there, like a banker, but they would put you in classes. You go to classes every week. There was testing. It was a great program. But I knew as soon as I got there, I didn't want to be there long term. I didn't want to work for a big company like that.
Yeah.
So I applied to Wharton when I was actually at GE, and got rejected actually in the first go around. And they were like, "Look, you've got 2 weeks of work experience. Like maybe you should work a little bit more."
That's
and I'm like,
wild
"Yeah,
they
but I
said
know."
that coming from GE though. I mean, that like what was that? Was the Six Sigma program a thing then, or was it called I'm guessing maybe it wasn't.
No,
called that at that
they
point.
developed that maybe on the back end, me being there. They had something called Workout when I was there. That was the big mantra of Jack Welch was Workout. Like, how do we empower the employees to eliminate, useless work? And so it was all about process improvement. And so there was all sorts of stuff around that. but they hadn't really gotten into the Six Sigma, stuff till later.
That was the place to be. I can't believe. I mean, it makes me happy to hear you got rejected because it gives me hope in life. But other than that, I'm a little surprised by it.
I was only 2 weeks on the job when I applied to Wharton the first time around, and then they said,
literally, you meant that literally?
No, literally.
I thought you meant that figuratively.
And and so they said you should apply when you finish your program. So I reapplied, and I actually got in, thank God. So I left GE to go to Wharton, and got there in '93, graduated in '95. In the middle of that summer job was a summer associate at Goldman Sachs in the financial institutions group. So, and that's how I kind of got into banking, and that's how I got into financial services. And it was that summer that I randomly got staffed on a quasi fintech company. It was called Account Portfolios. It was a debt collections tech company. So I had to go research everything about debt collections and credit-enabled technology, and looked up all the companies like Equifax, Experian, TransUnion, and so on and so forth. And so that was really the beginning of fintech for me in middle of '94. So I came back in '95 full time. They still hadn't sold the company because it was a little small little deal that wasn't really meaningful to anybody, which was also showed me that like some of these smaller deals that were kind of in the tech space that were way below the radar of Goldman Sachs proper in the FIG group, because they were used to doing these $20 billion, $30 billion deals all the time. The tech side just got totally ignored for the most part. And then we ended up forming a group eventually to sort of cover all the .com companies that were coming up. So that's the whole genesis. You got me from baby to, baby banker in 1995.
I love it. So what was the thing at Goldman, or like, was there maybe not a straw that broke the camel's back or anything like that, but was there kind of a moment that you remember when you decided like, I'm going to go fucking do this thing and like jump off the bridge and build it?
Well, it was, the .com burst, if you will. You had the boom and the bust. Yeah. And I was lucky to survive tons of, layoffs and all that kind of stuff. And I was sitting in my cube one day or in my office, and, I still remember sitting there and thinking, I had to go do this on my own because the bonus levels were super low. And there were almost no deals, but there was some smaller deals that I figured I could go get, right? And as a sole proprietor and with 2 employees or a half an employee, that would be pretty lucrative. And probably the straw that broke the camel's back more so than even that was because there wasn't a lot going on in tech deals. They said, we want you to go back and work on these big public company deals, right? It was go back and cover Wells Fargo. I got put on the Wells Fargo team. Like I got put on the Countrywide team, and I was going to these meetings. And even as a reasonably senior VP at the time, I was like carrying the books and the 5th guy at the conference table, and I was not very important anymore. And I said, like, this is a stark difference between what I was doing, which is running all my own deals and running a small group in fintech. And so I figured I could just break out and do it on my own. So I literally sitting in my office at Goldman Sachs, went to companycorporation.com, and for $99, I kind of started typing in names and came up with FT Partners, Financial Technology Partners, and it was available, the URL and the name LLC. And so I did that. I think it was in October of 2001. I didn't leave for a couple months after that, but so if you go online somewhere, it'll say, incorporated October 2001. So, and that was also right after 9/11. So the market was even worse at that time. So I think I just got it going on in my head that this wasn't going to get any better. And so let's go do something entrepreneurial.
Yeah. The name of the company is a little bit prescient. In 2001 or 2002, had anyone said the word fintech yet?
No, I don't know. I think there's like some book somewhere someone found in a library where someone did at one point in time say fintech, but
sure.
But in the world that I was living in, no. Goldman back then, and I think still to this day, calls it FIG tech, which I find hilarious.
What is
FIG is Financial Institutions Group, and then tech, they tagged on to that. So
Heaven
And
forbid Goldman do anything that is not just created by Goldman.
exactly. So, but, it's sort of a sign of the times, I guess, back then. But yeah, no, financial technology was what we called it, and we didn't even call it fintech till years later. And I think we might have been one of the first, but it's hard to lay claim on that. I still want to go back and look at my emails and see when's the first time we ever typed that word and whether we did invent it or not. But we were probably one of the most early firms that sort of said, let's build any kind of a company around financial technology as a sector, as a banker, I should say. There was lots of fintech companies back then in the dot-com days. But so anyway, that was 2001, 2002. And, as the story goes, it was kind of done out of my apartment. I lived on Vallejo Street in Pack Heights. I had a tiny apartment underneath a bunch of other people's, and kind of like the basement unit of a house. And so that's where we really got it going. And somehow or other it has ended up working out.
Yeah, well, I normally think basement unit when I think FT Partners. I think basement unit, boutique advisory firm.
Exactly. We were on the ground floor, literally. We were underground. So
that was a good one.
Garden apartment.
So
yeah.
Let's take it back, even not like back in time, but back to kind of first principles. I pride myself on asking dumb questions that I'm sure at least one of my listeners has.
There you go.
So what does and this is actually probably hilariously a question that a lot of people have. What does an investment banker do from day to day? When should one think about engaging with one? Just, talk us through the first principles of it. And I'd love to understand also maybe what your life was like as an investment banker and how you functioned inside of a Goldman versus how, FT Partners functions, kind of a thing.
Yeah. I mean, I could answer that and take a week to explain all that. But, it's kind of like, if I say I'm a doctor, like, what does that mean? Am I a podiatrist or brain surgeon or whatever? Investment bank is the same thing. There's 100 different versions of it, lots of different firms, lots of different types of deal structures and places. But for us, we're obviously very focused on fintech. So we're very sector focused. And probably the most important thing to know about us is we are absolutely and positively only focused on working for founders and CEOs of mostly private companies, but the job is essentially on the selling side, right? So when I say that, it's really important. So the 2 or 3 things that we do are all very similar and kind of like the same thing. So we're, if I get really specific about it, we help a lot of private companies raise a lot of capital, and that's really an important part of their journey because it protects their dilution and helps them advance their businesses. Sometimes we'll be selling the whole company, right? So, for example, we just sold a company called Truebill to Rocket Mortgage for close to $1.5 billion. And back to the capital raising, we just raised $1.2 billion for Revolut at $33 billion in Europe. So, you got big time capital raising, big M&A deals. And then the third thing we do is help companies on IPOs. So, once in a while, a company will want to go public, and while they're going to use a major underwriter for their, full-blown advice, we'll kind of come in as the overlay manager to do an IPO advisory assignment. In the realm of selling companies, that includes selling companies to SPACs, as well as strategics or LBO firms. So whoever the counterparty is. It could be lots of different types. And then a lot of times the assignment sort of says, we don't know what we want to do. Maybe we'll raise private capital. Maybe we'll go for a SPAC. Maybe we'll sell the company to a strategic, or maybe we'll take strategic money for a minority of the company. But the fundamental thing is really important to understand for those listeners out there. If you were to go talk to a banker from, say, Goldman Sachs or Morgan Stanley or JP Morgan, who are all, great firms, it'd be interesting to sort of ask them, hey, name the last 10 transactions you worked on. And it's a bit of a trick question because they're going to answer, well, I was on the buy side of Square buying Afterpay, or I did a spin out of XYZ PayPal from eBay, or I was on the buy side of, Visa Plaid when it fell apart, or I raised $400 million of debt for Jack Henry, right? And these are their transactions. but only 1 in like 10 of the things that they say, or maybe 1 in 20 is like, oh, I raised private capital for XYZ founder company, right? If you ask us what's the last 10 things we worked on or last 500 things we worked on, every single one of them is representing a founder in some kind of a selling situation. We're not spinning off companies. We're not doing the buy side, etc. So we can be very, very loyal to the founders of these companies. And so therefore, you're not going to find us, sort of selling Truebill, but then the next week trying to get hired by Rocket on the buy side of some other deal. So we don't really cater to or count out to the big strategics, right? So we can actually help you go and sell things to them. We don't get hired by VC firms to go do buying projects. So a lot of our banker competitors make most of their money by representing, big buyers on deals or doing big financings for buyers on deals. So it makes it very hard for someone at one of those big banks to negotiate on a founder's behalf against a major private equity firm or a major VC or a major corporate, because they're seeking their revenue most of the time from those parties and they have repeat relationships. So you really need somebody that's totally independent and totally on the sell side. Independent doesn't mean we could be an independent firm, but we could be working on buying and selling. But the fact that we're only on the selling side. So the other really important point of what we do, of being on the sell side all the time, is you develop certain muscles, right? If you're a 40-yard dash, kind of person, you're going to develop really, really strong muscles to do well at the 40-yard dash. Yeah. One of our clients is a pro ping pong player. The guy's got a muscle right here that you've never seen on any other human being before, because he's constantly flicking the paddle. So you get different muscles for doing different things that are highly acute to that particular sport. And so we've done that in the private capital raising and the selling of companies and SPACing of companies and IPOing of companies. And so that's a very, very specific set of things that we do. And the whole point of it is you shouldn't really hire a banker at all if you're going to hire someone that's sort of a jack of all trades but doesn't really do what you need done. And so we are that firm that does what you need done if it's one of those things. We're not the firm to call if you want to spin off a big division or you're selling a small division of a company and in a spin out transaction. But we are the company to call if you're selling stock or selling your company. And so we've perfected over 20 years, how do you do that really, really well? And how do you achieve great valuations for founders and CEOs and the backers of those companies? So that's really the claim to fame for FT has been, yes, you guys are great at financial technology, you're everywhere, you publish all this research, you know the space really well, we could talk about it for days, whether it's crypto or lending or capital markets tech, but there's now a lot of people that do know fintech, right? It's just the intersection of people that know fintech well and that are also amazing at selling companies and raising capital. That's a null set, other than us, in our opinion. And so that's kind of where we really differentiate ourselves on the execution quality of what we're doing. And one fun fact is we don't have anybody at the company that calls on potential clients. So everything we do is a repeat client or a referral from some other client that told some other CEO that we did a good job on their deal. And that's 100% of how we win business. That has become kind of a passion for us, is to keep that going. So anyway, I'm not trying to sell everyone on FT Partners, but you ask what we do. But what we do is very specific versus, say, what a Goldman or JP Morgan or a Centerview or a Moelis and Company or a Catalyst do. They do very different types of things that would be irrelevant in terms of the frequency of the things they're doing versus us. Does that make sense?
It does make sense, and I'm glad you explained it that way, because one of the things I was hoping you were going to kind of hint at and get into was some of the potential conflict and some of the potential, I guess it's just like a following of the money kind of thing, right? Like when you think about the incentives, and your incentives are very clearly aligned with the founder, right, as you just said and outlined. But I think there's maybe some situations where you might not be aligned, or there may be some not conflict in the like legal way, but conflict in like the human way with VCs as an example. Like I've definitely heard some VCs say you don't need to talk to an investment banker, things along those lines. So what do you say to that? Kind of what's your perspective on that?
We hear that all the time, and I find it quite, on the one hand, humorous, on the other hand, sort of, very, very important element of how we built our business, right? The humor part is, of course, VCs would not really want, a target company that they're trying to invest in to have a great advisor who had access to thousands of investors and knew all the precedent valuations and had a reputation of setting world records on value. You would never want your opponent to have, someone like that. I think, though, the topic gets a little bit confused because sometimes I think they're right. If you hire the wrong advisor, you're probably better off without an advisor, right? If you hire the right advisor, you're definitely better off with that advisor than not. And I think that the Valley, it confuses the things that are really important. And I think, like I said, they're right if the question is, should you hire someone and you're hiring the wrong person, right? Because there's a lot of pattern recognition out there where a company goes around, tries to raise capital, and for whatever reason it can't, usually because it overpriced itself or because it doesn't have a great business model. And a lot of those companies will often go and hire bankers, right? And so the VCs are seeing the deal for the second or third time, and they get a little bit of pattern recognition that, okay, when these kind of bankers show me deals, I can kind of tell already they're already shop deals or maybe not great companies or they're over asking on price, right? And so I agree. In that situation, the VCs would rather not see the banker there. I'd say we've built the firm over 20 years to be the one firm, I think, that has completely broken down that barrier. And VCs, even though they know they may pay up a little bit, are happy to see us on the other side of the transaction. Because what we've done is we've said, look, we're going to screen companies to work with the best companies or some of the best companies, right? And when we do, we make sure that those companies are incredibly transparent in explaining their business model. So we're making sure the numbers are perfectly explained, whether it's a cohort analysis or whatever. We've got data scientists on our team, financial forensic experts. So we're providing an enormous amount of information very quickly to a perfect audience of investors, and they can get up to speed like that. I won't say the name of the company or the name of the VC, but this has happened multiple times where VCs have been looking at companies and said, even though I might pay more, you need to hire FT partners because they will at least get your company ready to be shown to someone like me, and I can actually digest it because it's going to take me 3 months to ask all these questions, and by then you're going to get tired of me or I'm going to get tired of you. So when we go out to market, it's giving crystal clear information to the investors, and with that information, they can feel higher confidence level in the business that they're actually investing in or buying, and might be able to pay a little bit more for it because of that, or maybe they don't like something about it and it's not for them, but they're getting the crystal clear information. So I'd say, there was a Twitter feed. I forget, it was Harry Stebbings or someone had a Twitter storm about, anyone who hires a fundraising advisor, is crazy.
I think it was Harry. Yeah, it was super general too.
But unbeknownst to me, 5 or 6 people were chiming in, unless it's FT partners, right? And you can go to that Twitter stream and see that. And I sort of said, hey, thanks, guys. I really appreciate that. It warms my heart because I spend my life defending against that. You would think after 20 years of, doing killer capital raises that people would finally understand. But I do think I'm sympathetic to the argument. But I also think, look, founders have a lot going on. Founders are not supposed to be instantly connected to every VC in the Valley. And back when all you had to do was, theoretically drive up and down Sand Hill Road to get your capital, that was one thing. But now, there's investors all over the world in every corner of the earth. How many people wake up in the morning knowing Naspers, right, which is a South African-based public company that has billions of dollars to invest in private companies. We have almost no everybody in Silicon Valley, including the Silicon Valley elite, knows Naspers that well, right? They made a $240 million gain or something on their purchase of Tencent stock, and now they're deploying that, right? Or how many people know, Falcon Edge, which is now renamed itself, to AlphaWave, right? I mean, they just invested in two of our clients, hundreds of millions of dollars, but no one in Silicon Valley really knows who they are, right? Who knew who Code2 was 7 years ago, right? Until they invested in Snap, right?
Yeah,
but we can get to the CEOs and founders of all of these firms around the world because they're kind of calling us and saying, "Oh my God, hey, how did I miss, the $1 billion Revolut deal? Can I get in your next deal? How did I miss the, Divvy capital raise, and I missed a huge return there in a short period of time." So we get a lot of people calling us and saying, "Can I get in your guys' deal flow?" So, we've tried to turn the tables on an argument, but I can kind of sympathize with it. But like I said, I sympathize more with the founders of these companies who, there's no way they could have anywhere near the reach that someone like we would have with 250 professionals working, most of us for a good part of 20 years. And we have a dedicated private capital markets team that is spending literally 100% of their time, 10, 12, 15 people, getting to know and communicate with all these VCs around the world. So it's virtually impossible. There's also, I'll say this, sometimes VCs are quite, they're in one game in life, buy low, sell high, right? Yeah. So a lot of times you'll see a situation where a company's doing really, really well, and the VCs will say, "You shouldn't hire a banker." Well, the next thing you know, they're also trying to put more money in the company. So sometimes the advice isn't particularly genuine because they say, "Don't hire a banker, you should be able to find the money on your own." Well, they want to put the money in themselves. So the last thing they want is someone, pushing up the price and bringing all this transparency and demand to the company. So I have seen that, right, where the very people, saying don't hire a banker are the ones that want to put the money in. And so sometimes you do get some mixed advice from your board. It's rare, but I've seen that, be part of the argument. But look, we have so many great VC relationships, but, we work for the founders and CEOs of these companies for the most part. And by the way, I'll caveat all this with saying once in a while we will do a buy-side assignment. So if a client hires us to sort of sell their company or raise capital for them or whatever, and they want to go make acquisitions, then we'll do that. We typically don't even charge for that acquisition work that we're doing. And occasionally, a very large firm will ask us to work on something very, very micro period of time. Like Google hired us when they were looking to make an investment in Credit Karma because we had a lot of experience in that space. So we did a micro assignment for them. They put money in at $500 million. Of course, it sold for $7 billion. They made a fortune. And we've worked on a couple other buy sides, but you can count them on like one or two hands. So that's a bit of the story there.
It's interesting. I mean, it sounds analogous to the first work that you did in financial technology in terms of financial technology for debt collection. Like I think about TrueAccord today, and like there's some horrible. I mean, I'm sitting in Kansas City, right? Like the payday loan capital of the world. We are renowned for horrible debt collectors that will beat the hell out of your phone and make you feel horrible and tear apart your emotions and everything else.
It's better than breaking your kneecaps, though. So it's advanced.
Yeah, it's a step up from the mafia, but there's a reason Scott Tucker's in jail. But then there's TrueAccord, right? And also here in Kansas City, at least
great company
here in KC, great company, not your average debt collector, right? And you could understand how the whole world would say fuck debt collectors, but then you meet TrueAccord and you're like, oh, well maybe they're not too bad, right? So you kind of get to. I get why, and you kind of even alluded to it, but like you get why a Harry Stebbings would say something like that because you see enough bad actors over and over again. And even in KC, like it's so hard to raise a seed round, so hard to raise a Series A around here unless you're really damn good, unless you're a Sandy Kemper, a C2FO kind of person where, there's folks that'll try, give you access to $1 million in capital, take 10% of it, and it's like the least helpful, like just horrible capital that you could find in your entire life. So anyways, you get it, but this is why I want to talk to you, and this is why I want to put you up on the pedestal so people actually understand these nuances.
By the way, Harry responded to my tweet on that, and it was like, hey, you're good, whatever. So we love Harry, and maybe we'll come on his show one of these days too.
You should, yeah. That would make a lot of sense for you, yeah. And it would be a lot more focused than this show. So he would probably actually, he'd have very specific questions to ask you and time frames and such. And we're just bullshit.
He wouldn't have as good a hair or the whole like get up you got.
Oh, that's the nicest thing you've ever said to me, Steve. That's going to carry me through the rest of my day.
There you go.
So you alluded to Truebill earlier, and this is one of the things that I really wanted to ask you, just so that listeners can really wrap their head around it. But one of the things you said was get your company ready, right, for whatever that is, if that's the next capital raise, if that's the exit, whatever it is. At what point do you start, like, building that relationship? At what point did Haroon and Yaya reach out and say, like, hey, we need help with this? Or maybe not even at what point did they? What point should they have, and at what point should founders think about kind of starting that conversation?
I mean, I'll put that specific situation aside just due to confidentiality, but I would say we get the calls at all points in time, 2 years ahead of time, 2 days ahead of time, right? Meaning, we have at least 2 companies right now that are calling us saying, I have 3 term sheets. What do I do? Do I call other people? Do I take these terms? There's some funky terms in here, whatever the case may be. Get in here, you're hired tonight, and we need to work all weekend on this. And we do get that from time to time. And that's a great situation because we can add a ton of value in a very short period of time, and probably more so than most people think, right? And it's not just on maximizing value, but it's finding the right investor, getting the right terms, getting founders the right level of like top up and things like that, which has become a separate topic about how founders are sort of fighting back and clawing back some equity over the course of time for their great performance, and we've helped a lot of founders with that. But so we'll come in like right when there's term sheets on the table sometimes. And we'll come in sort of a year ahead of time or 6 months ahead of time. The more time we have, the more sort of prep we can do and things like that. And we're kind of known for digging in pretty hard on companies and sort of helping them tell their story the right way. And I have this analogy that I use, and sometimes I laugh about it, but sort of, when you're looking at a business, investors want to look at it with a microscope in terms of what have you done? What are you doing today? What are you doing tomorrow? Right? And they usually spend like 90% of their time on that, and maybe like 5% of their time looking at the medium term and 5% of the time looking at the long-term vision, right? And part of that is because they only have so much time they're going to look at any given deal. And usually the companies do a okay job of teasing you about why it's a good business, but then the next layer is like there's 1,000 questions, right? And that takes up all the oxygen in the room, right? What we try to do is say, look, let's look at the business with a microscope, but let's take out the little film and just show it to you. Okay, here's what it is. Let's take one day and get all the microscopic stuff out of the way. Now let's start looking at the, call it the binoculars, right? Or the Hubble telescope, and bring all this stuff that's normally not in focus. You can't see, what microscopes see. You can't see what binoculars see. You can't see what Hubble telescope sees. But if you look into it, you can, right? And you can bring it all into focus. A lot of complexity, right? The 20-year story for a company or 10-year story is a very different way of talking and thinking and mindset than the microscope side of the story. And the stuff in the middle is very different than the long and the short story as well. So we sort of try to help these companies do the right work and right level of thinking to get the investors through the microscope stage very quickly so that they've got 90% of their time left to talk about the next 5 years and the next 15 years after that. And that's where a lot of the enterprise value comes through. And I think that's where we really differentiate ourselves in helping people do that, right? I can say companies that we've raised $500 million to $1 billion for, we're looking really only at the microscope, right? And they weren't doing a great job of telling the big story. Investors, I think, like that. I mean, they're going to pay, like I said, a little bit more because of it, but most likely they're going to feel more comfortable realizing this company is really going to be big, and FT's done a great job of telling that story. So, but that's the work. You can't do all that work in a weekend, right?
Right.
So you need, call it a month or two lead time would be ideal. But if it was only a weekend, I still think we could do a good job sort of quickly getting the data together, quickly figuring out, are they telling the right long-term story, and within a week be up and running And we do that all the time. And so we have a company in the UK right now, literally called us the other day, 2 term sheets on the table. And we have a team right this minute. We kicked off this morning at 6:30 a.m. my time because they're in the UK. They did me right and only did it at 6:30 in the morning instead of 5:30, which sometimes happens. And but they're working all day today. They'll be working all weekend on this. And by the way, I should and I will talk and brag about our team all the time because we have so many amazing employees at the firm. Every one of them, by the way, and we're growing and growing. But I have to say, we have all the stuff I'm talking about doing these, miracle transactions, these great preps and all this kind of stuff. I'm not doing it, right? I have a lot of ideas, but we have an incredible team that's doing all this work, and we dedicate, could be 5, 10, 15 people to a project, and they're working with that client, night and day to make sure that goes really, really well, times X number of deals a year in 6 continents or 7 continents. It's incredible, kind of what we get done in a given year. And I just have to sort of bow down and thank my employees my team members who have helped build this company and who we'd be nothing without. So, and our clients love them too. They're always trying to hire them and because they become almost like part of the family. So we have a lot of employees that are working for a lot of clients actually. So, but please don't hire employees. We love them. We'd like to keep them. So.
I will say I have noticed some quality FT Partners alums as I've gone through the industry in my time. But yeah, luckily, I am hiring, I guess, but I won't. We'll maintain our relationship. We'll be good. But that's actually a great transition. I can't speak. Transition into kind of just wrapping things up. So you mentioned that you're growing. I wanted to give you a chance to kind of say a little bit more about maybe where you're hiring. I know you're really leaning into content. Anything that you want to kind of put out into the ether for folks to get in touch, both in terms of how to get in touch to potentially do business with you, but also hiring and working with and for you.
That's good. Great question. I mean, we're a 250 person company. We'll probably be 400 people in a couple of years, and in an odd way, we're hiring in every single function. We're literally hiring in finance, accounting, legal, HR, marketing, ecosystem development, research, content, data science, and obviously on the banker side, we're hiring around the world. So mostly in San Francisco, New York, and London, and at all levels. First year analysts out of college, MBAs, MDs. It's all very curated and carefully done, but we are open to hiring at pretty much every level and every position in the whole company because it's all kind of expanding kind of in synchrony, so to speak. So you need people everywhere. And I would say the one area that we're really excited about is our equity research team. So we're kind of stealthily building an equity research team, which we've never had. We've always worked for the private companies, and it's not because we want to go work for public companies, but we get a lot of demand from the buy side saying, hey, look, you guys know the space better than the big banks. And quite frankly, some of the research analysts at the large banks are covering 35, 40 stocks. And you can't cover 35, 40 stocks well, so you end up covering everything sort of mediocre. And so we want to build sort of most deep, fintech research in the world. And so we're building a team. We hired the lead fintech analyst from Goldman Sachs and one of the leads from AllianceBernstein, Sanford Bernstein, one of the top research firms in the world covering fintech and payments. And so we're building a team around them to sort of become the preeminent provider of research in the equity side of things. So that's a little bit of a sneak peek of something that we're doing, and we could do another podcast on sometime if you want. But look, it's all about the clients and the team. And so the only metric we have internally to judge any of our bankers is how happy the clients are. So if they're super happy, I'm happy, and everyone's happy. So that's the name of the game.
I love it. Well, yeah, I'm gonna have to come visit you in Miami, or we're gonna have to do this in person, and we'll have to do a check-in kind of a little further down the road. I didn't get to ask you about SPACs. I didn't get to ask you about perspective on direct listing versus IPOs. There's so many nerdy things that we didn't get to cover. So we're gonna nerd
out on all that stuff.
I love it. I love it. And then, thank you, Steve. I appreciate you.
My pleasure. Be safe out there.